Hello traders, what's with the date 24th? Last year August 24th we had a gap down from Nifty, and today as I record this towards the fag end of the day 24th June 2016, thanks to Brexit we have a gap down in today's trade as well, followed by quite a sharp bounce back. I thought of quickly making a video which I have not been doing for a long time, and a promise to myself that I should maintain this and continue making these small snippets periodically. Now on my charts I have a simple Bollinger Band of 34 period, which is the red line, and I have the 1 standard deviation and the 2 standard deviation to gauge the volatility of price movements. What you have here on your charts on the daily, you have a hammer kind of a formation, but as most of my students were telling me today that it's a hammer so the market can go up. I don't see much of a downtrend so that I can call this a hammer. So I am going to discount this. I'm going to probably take this pattern with a pinch of salt and not expect the markets to bounce back significantly from current prices. Anyway, so why do I say so? Let's quickly do a top-down approach. I'm using the Metastock software and I am going to look at the monthly charts first. The monthly chart shows that I have a decent bounce back over the last 4 months, which came after the multi-legged corrections from the high of Feb 2015. Now what catches my attention in this chart is when I move in to check some hidden divergences with the stochastics 533. This is the indicator on the top over here. So I'm going to compare the line chart of the Nifty monthly with that of the stochastics 533, and in this case I'm going to ignore the dotted black line and only focus the red line. So if you focus that, these are where the stochastics readings are right now, and the previous highs of the market, which was close to the levels of 8100, is the red line over here. This suggests the fact that we are in a phase where there is a clear hidden divergence on the monthly chart of Nifty. This suggests the fact that if the current lows are broken, then the downtrend can very as well continue further down. The monthly chart essentially has a correction which is close to 50% of the fall that we have so far, and it's kind of a little stretched. Let's drop down a little further and check the weekly charts. Not much damage in the weekly charts so far. We've seen a nice sequence of higher highs, higher lows, prices holding fairly well above the average. The band, the Bollinger Bands, is neither that much spread that we expect them to squeeze down. When we check the oscillators of stochastics as well as our favorite RSI 2, we don't see any divergences here, but we do see a negative divergence on the stochastics 5 period, which suggests the fact that the market is a little bit under pressure, but none of that clearly evident on the RSI 2. So the structure of prices on the weekly is fine. Let's go down to the daily charts from where we started. And we find here that both the indicators are following the raw price as it is, with not much changes at all. The only fact that we have quite a sharp bounce back from the index from its lows, and this low of 79.27, the psychological, let's say 7900, which is the lower band of the 1 standard deviation, acts as a crucial level to watch for. Any break of these lows can lead to further fall in the market, and in that case the monthly hidden divergence will get triggered and it can lead to much meaningful correction. On the upside, what should one look at? Obviously the previous highs of 8300, which has acted as a wall of resistance. And when I say wall of resistance, we've seen that multiple times the index have actually failed, and this is exactly from where the entire game started on 24th of August. Let me quickly refresh your memories. If you recall, on 24th of August 2015 we had a big gap down from the index, and that gap down came from a break of very strong supports which was close to that 8300. The blue band acted as a very good resistance when the index went back to that level in October, back to that level again in the month of early June this year, and now it has corrected from that level again. So yes, this stands out to be the crucial supply zone for the index. Levels to watch out for would be 7900 on the downside and 8300 on the upside. Volatility is the name of the game right now. Traders are likely to get stopped out in either direction. Ranges are likely to be on the higher side. Wait for the Bollinger Bands to come close to each other, which will indicate a fact that prices and the volatility has slowed down before the big move. I hope this video is useful for you, and as I promised, I'll be back with many such videos in the future. Thank you for listening.